Like if I'm a business owner right now, I'm paying six figures a year in taxes, like that definitely rings a bell in my mind. But I'm questioning, all right, like how does that actually work? Is that legal? Why does my CPA doesn't talk to me about that? Like, because can you explain a bit more about that?
Yes, I'll give you just some 30,000 foot educational overview. Like I said, this is not intended to be tax or legal advice, but one takes advantage of real estate in the big, beautiful bill, bonus depreciation, which has now been codified in the code and guaranteed. Now, you can't just buy a property for no money down and depreciate the whole thing. But if you put 20% down, let's say you put 100,000 down on a $500,000 property, right? You can get a deduction against income for $500,000 that year because you get to take all the depreciation expense the first year. And people say, yeah, but now I got to go find a property and rent it and all these things. And yeah, that's complicated. We've showed people for years how to set these stuff up on their own. These programs, right, they're all turnkey, 100% turnkey. Everything behind the scenes, paperwork wise, accounting wise, is done for you, provided, K1s to your CPA, the charitable stuff on. So one of them is just involved with real estate, but it's a very unique type of real estate. There's a company in Utah called Box House, and Box House has the only patent in the world to create shippable box houses. They build box houses, duplexes, and bungalows, depending on the size. The small one is a $70,000 down payment for a $350,000 deduction. That is the only client contribution. The balance of the 80% is put on an interest-only loan. The first payment starts January of 2028. There is positive cash flow off these. It's not guaranteed, obviously, and the reason why it's not guaranteed is because they can't assure you it's leased, right? However, we've had lots of disasters in this country. We've had fires in Hawaii and California and hurricanes and flooding right. And so FEMA, let's just talk about Maui. 2,200 homes destroyed, 68 have been rebuilt. Those other people in Maui, housing is not inexpensive, as you can imagine. So FEMA is spending close to $1,000 a night to put families in hotels, Airbnbs, VBBROs. So that's like 30 grand a month. Well, they can lease these units from 4 to 8 grand a month, depending on the size of the unit. And they're solar capable. Our government was also building data centers, AI data centers all over the country in very remote areas where they can get very inexpensive land costs and stuff. Well, they need housing for the construction people. So their government is got big contracts with this company, right? FEMA. And so they use Series LLC, Series partnerships, which is some of the same structure we're showing our clients to set up. And that's why we start with structure, so that when they go into that call, they're familiar with what they're talking about.
And again, it's all turnkey. It's very simple. I mean, you have to understand it, but I'm saying as far as the mechanisms, the client does not have to go through the hoops or jump, the mechanism. It's all turnkey the way we are able to present, implement this for our clients.
And we can stack some programs together. So for example, using the Box House, we can only mitigate 60% of income. That's the limit to the IRS.
And what's the requirement to get access to that? What's the non-negotiable that I need to have to get access to this? Is it anybody?
So you need to be paying either $100,000 a year or more in income taxes.
Yes.
For it to make sense. Maybe at 50, it might make sense, depending if there's a big capital gains event coming up, that there's some additional taxes. A household income needs to be minimum W-2 of 800 to qualify for this stuff. But anybody that has a one-time huge capital gains event would be eligible, right? For that kind of stuff, because a lot of our clients that we come across, they're facing. They've got a business and a real estate with their business that's completely depreciated to zero, and they're about to sell their business for $15 million. I have a client right now that we're working with. They're selling a business for $15 million. Their basis is 2. So they're looking at $2.6 million in capital gains tax on $13 million, right? And we are the tax team's able to show them how to mitigate that entire 2.6 million, right? So what that's also done is giving business owners that are thinking about selling their business, but what's stopping them is that capital gains thing. No, you can literally, with the right planning and the right strategies, with the help of our tax team, you can literally, think of the gross sale price as the net sale price.